The Phoenix housing market is changing, and here is what you need to know. All right, let's talk about what's really happening in the Phoenix real estate market right now. If you've been following the news, you've probably seen conflicting reports. Some say the market is cooling off, others say prices are still climbing, and then there are the doom and gloom headlights predicting a crash. So, which one is it? Well, it depends on where you're looking and what you're measuring. If you're a buyer, you might actually have a little more leverage right now. And if you're a seller, pricing strategy is more important than ever before. And if you're just trying to make sense of it all, don't worry, I've got you covered. Today, we're breaking down where the market stands, which areas are shifting the fastest, and what all this means for you. Let's first talk about what's happening with supply and demand. So here's the big picture. More homes are hitting the market, but demand isn't rising at the same pace. That means buyers have more options than they did a few months ago, and sellers are starting to feel a pressure to price more competitively. This data comes straight from the Cromford Report, which, if you're not familiar, is the most accurate real-time source for Phoenix housing market trends. It's not based on national numbers, it is specific to Greater Phoenix, which makes it way more reliable than those one-size-fit-all housing reports you see on the news. One of the key tools they use is called the Cromford Market Index, the CMI. Think of it as a scoreboard for supply and demand. Above 110 equals the seller's market, 90 to 110 means a balanced market, and below 90 is a buyer's market. Right now, 15 out of 17 of the largest cities in the valley have seen a drop in their CMI over the past month. That's a pretty clear sign that sellers aren't holding as much power as they used to. So let's talk about where we're seeing the biggest shifts. The biggest declines in seller advantage have been in Fountain Hills, down 21%. Maybe those mountain views aren't doing the heavy lifting right now. Maricopa, down 16%, likely due to all the new construction popping up, giving buyers more choices. Paradise Valley, down 14%. But honestly, if you're shopping in PV, you're probably not too concerned about short-term market shifts. Glendale and Avondale, both seeing double-digit declines, which means buyers in these areas might have a little bit more negotiating power. So where does that leave us? 7 cities are still in seller market territory, 5 are balanced, and 5 have already shifted to buyers markets. Now, let's talk about demand. If you've been waiting for more buyers to step into the market, there's some good news. We are finally past the Super Bowl and the Phoenix Open. Historically, we always see a wave of buyers come back into the market once Super Bowl weekend is over. But the question is, will that be enough to absorb all the extra inventory? Right now, supply is still growing faster than demand. So until that trend reverses, sellers are going to have to work a little bit harder. So let's zoom in on Chandler because this is one of the most in-demand areas in the Southeast Valley. Here's what's happening. Active listings jumped from 461 to 558, which means more homes are sitting on the market. Pending sales increased from 84 to 137, so buyers are still making moves, but they're taking their time. And the average price per square foot for active listings, $306.57, which is holding steady from last month. Under contract homes are averaging $299.03 per square foot, which means buyers are negotiating slightly lower than list price. Now, days on market is averaging 64 days, which is actually a little faster than last month. So what does that tell us? That tells us that Chandler is still strong, but buyers have more options than before. If you're a seller, pricing smart is key because homes that are overpriced are sitting longer and getting price reductions. If you're a buyer, you've got a little bit more breathing room, but competition for well-priced homes is still there. Now, I want to talk about something that is still pretty confusing for people. A lot of people don't understand the difference between median price and average price. They are not the same thing, and they tell 2 very different stories. The median price, this is the middle price. Half of the homes sold for more, half of the homes sold for less. Average price, this is all home prices added together and divided by the number of homes sold. So why does this matter? Well, because luxury home sales skew the average price higher. making it look like prices are rising more than they actually are. For example, last year in Maricopa County, median home price was $471,464. The average home price, $615,025. That's a 30% difference. So if you hear that average home prices are skyrocketing, take it with a grain of salt. The median price is what actually reflects what a typical home is selling for. Now, we have to look back on January's numbers because we've not yet made it through February. So what was January's market trends? I'm going to run you through those numbers. 5,066 homes closed, up 6.7% from last year, but down 13% from December. New home sales were up 4.1% year over year, but down 18% from December. Resale homes increased 7.4% from last year, but dipped slightly from December. So what's keeping prices steady? The luxury market. Even though lower and mid-range homes aren't moving as quickly, high-end home sales are keeping overall prices higher than expected. Another trend, new home sales are losing market shares. Builders used to have a huge advantage because they were offering mortgage rate buy-downs. But now, resale home sellers are offering similar incentives, making it more competitive. Now, a lot of people say, oh, Stacie, what about all these foreclosures? There's got to be concerns about that. Now, you probably heard that they are on the rise, and technically, yes, they are. But let's keep it in perspective. January saw 422 foreclosure notices in Maricopa County. In 2009, we had over 10,000 foreclosures in a single month. The long-term average is around 1,846 per month. So while foreclosure numbers are increasing, they are still nowhere near concerning levels. This is just the market getting back to normal and not a sign of a crash. So what does this all mean for you? If you're a buyer, you might have more negotiating power. But if demand picks up post-Super Bowl, that could change quickly. And if you're a seller, overpricing is very risky. Buyers have more choices now, and homes sitting too long are getting price cuts. If you're relocating to Phoenix, timing matters. Knowing which areas are leaning towards buyer markets can help you get a great deal. Bottom line, real estate is all about strategy. If you're thinking about buying or selling, let's chat. I can help you navigate the shifting market. If you found this video helpful, like, subscribe, and drop a comment. I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next video.